Hello, everyone. Welcome to Peabolic Notes. My name is Michael Kirkchin, and today is Saturday, May 21st, 2022, and welcome to my channel. I'd like to do my recording today and talk to you all about the current environment because it's very important, I find, for us to keep a level head because things seem to be a bit bearish. Obviously, as we all know, the entire ecosystem seems to be pretty negative as from the interest rates and also the Nasdaq, the S&P, cryptocurrencies. What happened last week with the Terra Luna and UST meltdown? Obviously, the entire space seems to be a bit negative. So I'd like to kind of give you a bird's eye view on the whole ecosystem and just to kind of show you exactly what happened when things were very similar to Bitcoin, specifically at these interest rate levels a couple of years back, because it seems to be like a deja vu for us, and that things may get a bit more negative than in a short little while, and for us to keep a level head as things do change. Before I start sharing with you the charts, please bear in mind this is not financial advice. I'm not a financial advisor. I'm just an investor in this cryptocurrency ecosystem, and I'm just sharing with you my personal insights and my knowledge. Let's get started and look at the charts, and let me show you exactly what I'm talking about. What I would like to do is kind of show you, before we look at the Bitcoin's chart and so forth and total cryptocurrency space, I'd like to show you what is going on right now with the interest rates, because this is very important for us to pay attention to this, because what's going on with interest rates is kind of going to have a direct impact on Bitcoin's price, it seems, in near little future. If we look at, this is the 10-year US Treasury chart, and obviously Bitcoin started trading sometime in around 2010. And what I'm going to do is for you is I'm not going to go all the way back to 2010, because it looks like if you look at what's going on, what I've done here is I've done basically the midpoint with 2 standard deviations up and above. This chart I learned from Raoul Pal, and he's a phenomenal macro investor. And I follow Raoul Pal closely with Real Vision, and he calls this chart the chart of truth. Now, why is this very important? Is because I want to show you what happened basically. Raoul had mentioned that each time we've gotten up to this higher part of the standard deviation, meaning that once we've been kind of, the 10-year treasuries have been 2 levels above for the standard deviation, every single time since 1999, we've had a recession. And I did that test actually when I went back even more towards history, and I went forward each time that we had this 10-year treasuries hit the higher end of the chart of truth. And whenever there was a yield inversion, meaning that whenever the short-term interest rates were also at the same time, short-term interest rates were actually higher than long-term interest rates between the 2-year and 10-year bonds, that's when we had a recession 4 out of 5 times, the last 5 recessions. So this is something that I learned from Raoul Pal, and I'd like to basically show you what happened when we had this exact same scenario happen a couple years back in 2018. Now, why is this important? Because it looks like right now we're at the same levels, and let me show you what happened for the exact same situation in 2018. In 2018, if you look at over here, this was again the chart of truth, and when the 10-year treasuries hit on October 22nd, 2018, when they hit this higher end of the standard deviation for this chart of truth, look at what happened with the entire cryptocurrency space and also Bitcoin's price. If you look at on October 22nd, 2018, the entire cryptocurrency space, basically from that period on October 22nd, 2018, we see that it was right over here, right? So the market cap of the entire cryptocurrency space was something in the range of 179 billion. And as we fast forward a few months afterwards, right, it went down to 90 billion. So basically it went really down by 50% from where it was at, right? So that basically, if we look at what's going on for us in a current space right now, with the total cryptocurrency space today, we've already gone down quite a bit, because if we look at when we hit the top mark of this chart of truth, it was something in the range of around 18th of April 2022, which was basically going back a month ago. And if we go look at total cryptocurrency space on in April of 2022, we basically at that point were something in the range of around 1.8 trillion, right? Dollars and dollars wise for the market cap. And if we look at, but that was already quite a bit lower compared to where it was just a few months back in November. November, we're close to 2 trillion. And in April, we're something around 1.8 trillion. So meaning that right now we are at 1.25 trillion. And if we go back to what happened the last time that we went through this scenario, from this point on forward, basically the total cryptocurrency space had gone down by around 50%. So meaning that what happened was potentially just if this time around is going to be something similar to that time around, that means that the total cryptocurrency space will be going down something in the range of around $900 billion, which would put us quite honestly, would put us really close to what we're calculating with these support lines, and also we're calculating also with this head and shoulders. Because over here, if we look at this head and shoulders, what we're seeing, if we look at this head from here to here, and if we bring it down to the similar distance over here on to calculate what the head and shoulders signal is showing us, it's showing us that potentially it can go down to the $1 trillion mark. Of course, this is not absolute. Nothing in technical analysis, nothing is really absolute, but it's just a guidance for us to be attentive and alert if this does happen. So, and it seems to be telling us that there's a potential drop of another 20% for this total cryptocurrency space. Now, how does this play out with Bitcoin? Let's look at what Bitcoin did in its exact same periods. If you look at what happened, basically, if you go back to October 22nd, 2018, when interest rates were really at this highest point of this chart of truth, and if you look at what Bitcoin had done back then, let's bring Bitcoin's chart so we can look at it properly. So on October 22nd, 2018, Bitcoin was hovering at the range of, let's play this out, October 2018, Bitcoin was really at approximately something in the range of $5,850. This is where it was. And then as we go back a few months, we see that Bitcoin's price had dropped. By December, it was down it had gone basically from something in the range of $5,800 all the way down to something in the range of approximately $3,500. So that was basically a drop of 40%. Now, I'm not saying that we can have the same scenario right now, because if you look back at what's happened already, is that since we hit this chart of truth really in late April 2022, which is almost a month ago, if you look at what Bitcoin has done really in the last month, we've already seen quite a drop already, because a month ago, we were something in the range of approximately $40,000. Now we're at $30,000. So we're already seeing a drop of around something in the range of 25% already to Bitcoin's price. So meaning that if we're going to play out something similar to what we had last time as well, it could easily go from $40,000. If we went down by another 40%, that would put us approximately in a range of the $24,000 mark. So which would be really lining up nicely with this 200-week moving average, because that's going to be putting us basically in the same range as over here. Now, why are we looking at this? Because as Bitcoin does drop a little more in the next couple of weeks, couple of months, it's important for us to keep a level head, because obviously the skeptics love talking negative of Bitcoin, even though if we look at everything else, I mean, let me just show you everything else. The entire space has been very, very bearish. I mean, this is the Nasdaq chart, really this is Nasdaq since November of last year. It's going straight down. Look at what's going on with the S&P. This is the S&P chart going since December of last year. It's gone down from 4,800 points down to right now below the 3,900 mark, and showing us also that it may drop another at least another 10% to something in range of the 200-week moving average. Yet people love to be negative about the cryptocurrency space just because this is the newer asset class. So for us, it's important to take a look at this, important for us to understand that. And I'll also like to show you something that I'm looking at with the on-chain analysis with Bitcoin, which does indicate that there is a high possibility that this may happen. If you look at what's going on now, please bear in mind the on-the-chain analysis is not absolute. It's not 100% accurate because it's very easy to manipulate these wallets by someone, let's say, having multiple wallets, which are smaller wallets. They can combine it and make it seem like as if all of a sudden there's a big whale that's basically accumulated. Meanwhile, it was just the same investor putting together multiple wallets and so forth. That's why whatever we're looking at over here is not perfect. It's not 100% accurate, but it's good for us to take a look at it and just kind of see what's going on. If you look at what's going on with the supply of addresses that bought Bitcoin between 24,875 and 33,706. Now, why are these dollars important to pay attention to? Because today, right now, at this moment, Bitcoin's price is something in the range of around $29,370 US, right? So meaning that those addresses that bought Bitcoin between these ranges of 24,875 and 30,706, of those addresses, 88% of them right now are out of the money. So meaning that 88% of those people had bought the Bitcoin. If you look at those addresses that bought Bitcoin between 24,875 and 33,706, which would put us basically something in the range of those addresses that bought Bitcoin between, let's put it on this chart, between 24,875, which would be right over here approximately, and then approximately $34,000, let's say somewhere on here. So of those buyers, there is 88% of them that are right now out of the money. So what does that mean? What that means to me is that the way I would see this is that from those guys that have bought in this price range, since 9 out of 10 almost are out of the money, meaning that there's a high possibility that those guys could be sellers. So because as they're getting closer and closer to their break-even point, they may want to sell to not be in the red. So if that happens, obviously that will put tremendous pressure, tremendous sell pressure, and that's when we may see a big red bar going up and we may see a big drop of the pricing. So that's why if that happens over the next couple of weeks, couple of months, let's be attentive to that and let's realize what's going on. So basically, these are the addresses that will be potentially doing that, putting that sell pressure to Bitcoin. So I'm just sharing with you this info. I'm paying close attention to this, and whatever happens to it, the Bitcoin's price over the next couple of weeks, couple of months, it's important for us to keep a level head and not panic. Obviously, there's not financial advice. I'm just sharing with you what I know about this space. Do your own research, and let's all hope for the best over the next little while. Thank you so much for watching, everyone. Bye-bye.